Nice to meet you, Rex. I'm VP of Product at WorldRemit. So WorldRemit is also an international money transfer company. We're helping our customers send money from 50 countries to over 140 countries. Our typical transaction size is about $200. So this will give you an indication of the kind of customers we have. They're typically migrants sending money back to Asia, Africa, and Latin America. Like Azimo, we focus on giving a lot of options on the receive side, so not just bank transfer or cash pickup, but we also do a lot of transactions to mobile money. So, these technologies like M-Pesa in Kenya, probably the most popular one, help millions more people connect to formal financial services who often don't have a traditional bank account. In terms of myself, I'm pleased to be back here in Copenhagen. Last time I was here, I was singing in the Copenhagen Concert Hall, but I won't be doing any songs for you.
Wow. So we are going to start off with the polling question, and it's focusing on the fact that this is a very hot area with lots of disruption, and we're asking, what is the biggest disruptor in the cross-border payments and remittance space? Mobile phones, we're all using our phones, global non-bank payment networks, banks, fast payment initiatives, blockchain, digital currencies, or other, which would be interesting to see how many others we get. It does look like mobile phones are okay. Yeah. Well, there has been a rise in the non-bank payment methods, and this is interesting. Okay. And now the global non-bank networks have taken the lead in this. Well, what we're planning to do here is we've, as a group, have talked about some of the really hot, critical issues in this space, and we're going to focus on a couple of these issues. I'm starting with Mike, who's going to be talking about M&A activity. There's been a lot of remittance M&A activity. FleetCor and Cambridge, VocaLink, MasterCard, Zoom, PayPal. How will this consolidation impact consumers and the marketplace, and what do you think is driving it? And do you see a lot more M&A activity in the future?
Yeah, so I think it's just getting started. I think the consolidation is actually something that is very likely, right? So you see a lot of these solutions that either are focused on the payable side or receivable side, some mobile first, some not. I think what you're seeing is people realize that institutions, businesses, even consumers, they want less financial service relationships, right? And the ones that they do trust, they want them to be able to provide additional services over time. So I think that's driving a lot of the acquisition, and you'll either see people trying to fill gaps in an existing portfolio. Some are making those for tech justification. They want a certain platform that they can scale. Maybe they're running a 20, 30-year-old platform, and they need that next generation platform to scale. So there's different reasons I think they're doing it, potentially even sometimes for talent, right? So I think that is an area that is just going to continue, and you're going to see big, huge multinational companies making some of those acquisitions. I think you'll also see some pretty massive mergers. And I think companies that have stayed out of the payment space, traditional software players, I think are going to start to wonder, hey, why do I have an ERP system, a cloud system, and I'm making someone make a payments decision outside of an Oracle, an SAP, and Salesforce. I think you'll see companies like that that try and finally figure out how to get into payments.
I would just add that the other area we see a lot of interest in terms of consolidation is all the telecoms guys. They're throwing off huge amounts of cash, but their revenues are under pressure, prices of data, high competition, and they just want to own more relationships with customers.
And I think the partnerships are key too. You're seeing the partnerships come out. I mean, at this conference alone, right, you're seeing massive partnerships, banks being more comfortable with partnerships. And I think those are really test beds for, what do those mergers or acquisitions look like?
And the market structure. I mean, even Western Union have a 15, 16% global market share in this space. That's very few big industries that are that fragmented. And like you say, the cost of actually putting down, having a digital strategy is pretty expensive. So I think it's going to change. I think it's going to flip on its head in the next 5 years.
And the analogy I'll use, we're discussing this earlier, is what happened in the technology sector. And I see in the fintech world, it's still immature in terms of the level of M&A that's happening. I think it's going to accelerate. So if you rewind to the late 1990s, kind of .com, pre-.com kind of bubble, the amount of technology companies that were out there versus kind of who's out there today, like companies like PeopleSoft, Siebel, EMC, Dell, that don't exist like they did in that time, and the acquisitions basically were driven towards the big global players that were either acquiring talent, customers, or capability they didn't have. So I think you're going to find that will continue to accelerate.
I've also seen investors very interested in this particular space, that they're, as long as they're worried about compliance always, but you're seeing a lot more, I'm hearing from investors as well, that this is an area. Well, Alice, for you, a lot of people equate cross-border payments with some of the highest risk business activity you can do. Cross-borders, AML, terrorist financing, and as an industry, cross-border payments, what can the industry do to prevent its products from being misused? Or is there anything you can really realistically do about that?
Well, I guess we're already a highly regulated industry in an attempt to stop these criminals and terrorists. And in practice, that means pretty much every money transfer company today is already collecting the kind of data on their customers. It's name, address, date of birth, maybe also passport or driving license. But in today's world, that's not really going to help you filter out any more than the most small-time crooks and help you pass your next audit. So I definitely think we need to, as an industry, take some new approaches, while at the same time balancing it with, creating a good enough user experience and not putting up so many hurdles that your service becomes unusable. So I think there are two main approaches that we should be thinking about. And first of all, I think we just need to understand our customers better. So we need to know what normal looks like for somebody making an online remittance payment, which may be different than what normal looks like for somebody doing an e-commerce transaction, for example. But the way you do this is to identify what does a typical customer do when they interact with your site. What pages are they visiting? How long does it take them to complete certain form fields? Would they use copy and paste? And these things become what people are calling like a behavioral biometric of a user. And then if you combine this data with other factors like what are the accounts they signed up with? How long have those email accounts been open, for example? What device are they using to access your service? Is it the same device they used last time? If it's a phone, is it contract or pay-as-you-go? And you basically need to take this whole suite of data points and use machine learning techniques to try and identify those fraud patterns.
You'd be using AI and things like that as well to
absolutely
enhance your ability.
And I think that the second approach that we need to do is we need to share information more, because the fraudsters certainly are. So, if you've taken even a cursory look at the dark web, you'll see that fraudsters are sharing tips and tricks about how to defraud every single one of the sites we're talking about here. We know that as remittance companies, fintech companies, payment providers, we all see the same kinds of typologies of fraud, sometimes even the same individuals committing the fraud, but that data is in silos, which means that it doesn't become useful to the industry as a whole in terms of tackling these problems. So I think that there are challenges to those approaches, not least data protection, but unless we start taking a holistic approach to the problem with ambitious data sets, with AI, with communities of crime fighters, then we're always going to be a couple of steps behind the bad guys.
I think one of the big difficult areas is that what you're describing is the future, and our laws are still written as though we were 20 years ago when they're saying, check date of birth, and wait, that kind of data is not going to work, and it creates this friction that makes it difficult.
It's important to note that, compared to a guy walking into a known agent location in Washington Heights and handing over some cash, your digital footprint is incredibly rich. So, you have access, you can run MI, ML techniques, you can do a whole bunch of stuff that you just can't do. And you're actually making the centralized part of the business responsible for compliance. I mean, a lot of the industry players who've run into trouble about this stuff have really not been able to control their agent network strictly enough. So, digital is an opportunity to, I think, solve that.
I think a big shift we've seen too is, again, kind of 5 years ago, you wouldn't have seen data scientists in this industry, and today we've got a team of data scientists that are just looking at data. We process 31 transactions a second, and every single one of those transactions is going through a Hadoop cluster of petabytes of data, doing link analysis and real-time decisioning to basically say, do we want to let this transaction through or not? And we've got a team of people who are just basically looking at those algorithms and continuing to fine-tune it. So that's a big shift that we've had to make to continue to stay ahead of the bad guys.
Yeah, wow. Okay, my next question is for Mike. By the way, you know we have a Mike and a Michael.
See many mics.
Not to mention our microphones. So moving money across borders is a quintessential use case for the blockchain. And we're hearing a lot about how you can use digital currencies to tokenize value, move it across a border, then reconvert it back to a fiat currency. Some say that eventually blockchain will eliminate intermediaries from the remittance business. And do you agree that blockchain is going to be a big disruptor for cross-border payments, and should that be a concern?
I believe it already has been. It is more for those who have already been onboarded onto the system. They don't require an intermediary. So it's more for people that like to be their own bank. For example, if anyone in this room has a Bitcoin wallet, I can send you any amount of currency right now in a couple of seconds without a third party. I don't have to pay an additional fee. I'm not asking anyone for permission. I believe there's a major problem that I cannot give you money unless you're right in front of me without a system like cryptocurrency. You have to ask your bank for permission to send a wire, or Western Union, or any other third party. The downside is, of course, the conversion back to fiat. You'd have to handle that on your own if you're using your own Bitcoin wallet. So we have other services like Rebit, which will do all of this for you. They're more Western Union, like where you go into one of their offices, you give them cash, they digitize the cash, send it to one of their agents elsewhere, and then they reconvert it to fiat for you. Those systems are comparable to Western Union. I don't believe that Western Union is a competition due to old technology. I believe that a major value of theirs is the insurance. You have a safety net. If you send some money to South Africa and the agent over there decides to rob you, you have some recourse. The Bitcoin industry, the digital currency industry, is much smaller by comparison, and the elimination of those insurance costs results in much smaller transaction fees. My example of being able to send funds to anybody in this room, I guess anybody $500,000 for about $2 in fees right now would take about 10 seconds. Confirmations would take a few more minutes, but the transaction's done right away. So if you're already onboarded onto the system, obviously the entire remittance network has kind of been eliminated for you because we can simply do it ourselves. So I don't think it's so much of a problem or a concern. I think it's an evolution of the space. I think it's necessary, and I see it as a good thing.
Do you see the remittance industry moving onto a blockchain platform, or?
I believe the value is still in the convenience for these remittance companies of being able to go into the office and have somebody take care of this for you. In some ways, it's comparable to going to a broker to purchase another currency versus signing up at a foreign exchange company and doing the trade yourself. That added convenience makes it very worthwhile for many people who are doing numerous transactions. If I'm sending a great deal of money to people here all the time, it makes more sense for me to do it the digital currency way. If I'm sending money to one person in Mexico once every few months, I would rather use one of these other services. I think it would make a lot more sense.
What do you think is the blocker for consumer adoption, right? For me, relatively technology savvy person, getting a Bitcoin wallet, signing up for one, understanding it. I think of my parents, my brothers, my sisters, the percentage of the population that's penetrated that have a digital currency effectively. What do you think the blocker? What would be the tipping point?
It's basically the ease of use for onboarding. The exchanges are an issue. Right now, we've been slammed. Digital currency has skyrocketed. Ethereum is up over 1,000% in the last 2 months. Bitcoin's doubled in the last 2 months. So everybody and their grandmother's pretty much trying to buy Bitcoin. In North America, every exchange has a 2 to 6 week backlog for verification. Deposits are late, customer support complaints all over the internet. Quadriga specifically has had more signups in the last month than we had in the last 3 years combined. So this massive backlog is becoming somewhat of an issue. In the US, we have Coinbase, North America's largest Bitcoin exchange. Most well known, Goldman Sachs is one of their investors. They're currently doing a raise at $1 billion valuation. They made it very easy for Americans. You can simply connect to your ACH bank account and just click, and they'll take care of it for you. It's more of a brokerage than a trading platform. There's also Bitcoin ATMs, mostly vending machines, where you can just go there, feed in some cash, and it'll spit out a Bitcoin for you into your account. The fees on there are fairly high. People are willing to pay them because the price keeps spiking. You can pay your 5% fee at an ATM, or you can go the traditional way, and the price can go up another 20% in that time frame. So the fear of missing out is resulting in quite a few new clients coming into this. So I believe as you make it easier to onboard clients, the barrier to entry will go away.
I think the tipping point will be when one of the big banks adopts it. Like, do you see that happening soon? Because that'll do two things. One, it'll give it credibility, but two, it'll actually provide the liquidity that the Bitcoin environment needs to be able to truly facilitate cross-border trade.
Yeah, there were around 40 banks that joined R3, which was there to test blockchain technology and how it could provide value to banks. They found value and they pretty much created their own blockchain.
Yeah.
I don't see any reason for any of these organizations to really use our blockchain. Our blockchain is more of the people blockchain. If a bank sends a wire to another bank and the funds are claimed as lost, they aren't in the same situation we are. So they have far more recourse, they have legal repercussions, and they don't really need a trustless system quite as much as we do. They'll find efficiency in the data storage, they'll find efficiency in the immutable blockchain, but they won't see as much in the trustless confirmation system. So I believe that as a result, they are already using blockchain technology, but they're using their own private blockchains. There's also numerous banks, including Goldman Sachs, that are doing the same with Ethereum.
In my view, what I think the interesting use case for remittances is where the consumers don't have to actually go out and buy Bitcoin, because they're anxious about it, and instead there are services, there are not a whole bunch, but there are services where you give them dollars, they convert it to Bitcoin, instantly transfer it to Manila, they revert it to fiat currency, and they just use the tokenized Bitcoin to move funds across borders rather than expecting consumers all. I'm not a believer that there's going to be mass adoption by consumers, but I see the use of these, transferring value as something.
I think that's a realistic view, and this has been quite a balanced discussion, which is good because sometimes people come in talking about how Bitcoin or blockchain is going to be the silver bullet for remittances. It kind of ignores what actually tends to make a remittance payment expensive is the regulation on the send side and the last mile on the receive side, like how are the people actually going to get their money. So yeah, it definitely has a role in the ecosystem, but I don't think we should overemphasize how much it's going to revolutionize the industry.
I agree. One of the, we're now switching gears to talk about banking. This is one of those areas which is, there have been lots of reports about banks being very anxious about doing business with remittance or payments companies. They see it as high risk, as we've already discussed, and there have been complaints about de-risking on, from whole country levels. And so my question for Michael here is, have you ever had to deal or know others who've had to deal with banks refusing to do business just because you're high risk? And what guidance would you provide to remittance companies who are trying to establish a banking relationship?
Yeah, I mean, sure. We've had issues with banking. I think everyone on this panel has struggled with those relationships, and it's odd because we are generating hundreds of millions of dollars of revenue for these banks, more than enough to pay for the fancy stands that some of them have here. But they also have a very difficult relationship with the sector. I think it's interesting that the really big fines that you've seen have been generally HSBC, BNP, the sanctions busting stuff that the DOJ have handed out that have actually made the whole banking sector very nervous about doing anything. The paranoid bankers is kind of like the story of the last 5 years. Compliance guys are now in charge, but it's made it really difficult, those fines, to work with companies like ours. But all of that activity, with the exception of a pretty monster fine the Western Union got hit with recently, all of that activity has been focused on internal employees in the bank doing the wrong thing. So yeah, I think it's a problem. It's going to continue to be a problem. I think the revenues are hard for the banks to ignore. There are a handful of banks in most jurisdictions that we work with money transfer companies. We also have a responsibility to do the best-in-class KYC for nominal AML and actually show those guys that we're held to a higher standard than they are themselves. I think there are, potentially bad actors in the system who have made it hard for everyone. And I think we have a responsibility as an industry to educate people. What would I expect? What would the advice be to new startups in this sector? Talk to lots of people. It's a funnel. Try and be really focused on your compliance from day one. Try and make very good friends with the regulator, because in some of these jurisdictions, it's actually the government or the regulator who are pushing the banks into actually providing services for these businesses, and just articulate how, things like the digital identity that we talked about, how actually transferring money often with a digital MTO at least is a much safer process than doing it with a bank. So those would be, I suppose, those are my key points. It's a really difficult one. I think the curve has I think we've seen the top of de-risking. I think as we see consolidation, larger players will have deep relationships with multiple banks, and people who are smaller will struggle, and ultimately they'll exit the market. So I think you're going to see it's another driver of consolidation. The other thing I would say is that the regulators have a responsibility on this stuff, because banks see themselves as the de facto enforcers of some of the rules, and because they don't feel the regulators are doing their job properly, they feel that they have to go that extra mile. But really, if I'm regulated as a e-money institution, and I've satisfied or a money transfer operator in the US, I have satisfied the requirements to be regulated, then a bank should give me an account. I've satisfied the regulator that I'm good to do what I need to do, but that's not the case, because the banks effectively think the regulators aren't policing it tight enough.
And they look at it risk reward, right? I mean, they surely do. I think Santander had almost 600 million of cross-border revenue, 600 million euros, right?
Yeah.
So there's that core business that they have, and is it worth maybe $1 million, $2 million, $3 million, in revenue for that bank if they sign a relatively large, right, even money transfer company from a bank revenue perspective? So I think they always will look at it that way, and it's very hard to look at a number like that they have in core business and then say we're going to put it at risk for maybe another $1 or $2 million.
They end up weighing, cost and benefit, and there's that zero tolerance approach that some regulators take. The banks just feel like that is too expensive for them.
And I think early stage, it's so key. I mean, it's, everybody up there has probably been told no by a bank and then been chased by that same bank, right? As you grow your volume, as you grow the business, right? And I think part of it at the early stage is trying to really make sure you have that compliance layer built out so that you really do, right? Whenever I see a money-related or a fintech startup, and one of their key hires isn't a great chief compliance officer or somebody that's watching over compliance and actually gets it, or their advisory board doesn't have that on it, it's a huge issue, right? Like, you can't look another way on that hire early stage, because every bank meeting, that's going to be a critical conversation, right? So it's one of the things I think people oftentimes will get to that later when we get to scale, but you may not have a shot at getting it.
Do you think there's a regulatory, PSD2 is basically making it a bank can't drop you without having a reason, and I know there's been talk about trying to get some regulatory, like maybe a safe harbor for banks, so that if they're dealing with some company that's licensed, that they don't get hit with these huge penalties. I don't know if any of that's possible.
I think it's very ironic, because they go, we're making a commercial decision on the basis that Mike's just outlined. We don't want to work with you guys. It's just a commercial decision. But banks are different. Banks are the fabric and strategically important, and we just pumped billions of dollars of taxpayers' money into them to keep them afloat. So, they do have a responsibility to the ecosystem to provide those services. You can't argue that, and I think they have a responsibility to fintech. I think it's changing, though. People are getting more excited about fintech. They're all here. Maybe this is not their favourite part, and they like to do stuff that's non-regulated. But I think we've hit peak de-risking. From here on in, you're going to see banks getting a little bit bolder.
That's great. That's good. So my last question is for Adam, and that's the going back to the regulation issue. I know last night's the last cross-border session was survey results, and legal regulation, especially differing regulation country by country, was identified as one of the top hurdles for this industry. Here in Europe, we've got the new money laundering directive, the second PSD2, the GDPR, and of course in the US we've got the Consumer Financial Protection Bureau's lengthy sets of regs and more, Vincent, lots of laws in this space. And which of these do you think are going to have the biggest impact? How will the industry be able to adapt to this onslaught of regulation?
Yeah, that's a great question, and it ties in nicely to the previous one. I don't think there's one particular regulation that's kind of a concern versus the other. I think what we're seeing is that the pace of regulatory change is accelerating, and it's not going to slow down. Right? The bar keeps getting higher, and it's not going to come down or stay where it is. It's going to keep going up. So as a regulator in one part of the world raises the bar, the regulators in the other look at that and either match or go higher, and you're going to continue to see see this happen, and it's not going to get easier. So I think that the companies that have taken the time, like we did 4 or 5 years ago, to kind of see this coming and invest in the regulatory frameworks, invest in the compliance systems, the processes, the people, as Mike said, to get ahead of this, are the ones that are going to be well positioned. For us, 20% of our employees work in this space. 2,000 people whose job it is full time every day to worry about the changing regulations and staying ahead of those. So for us, we see actually as a competitive advantage. That investment that we've made will enable us to adapt and continue to change to meet the changing regulations. I think for the industry, some of the smaller fintechs who haven't made those investments may have challenges, right? So I think that's the thing that they'll have to look at is, can they keep up with the investment needed to keep up with that level of change that's happening.
And it's changing all the time.
It's
so
changing all the time. That's the only constant is change.
It's also interesting, I think, if you take the global perspective, because we're beginning to launch in a number of markets. For example, we just got the Sandbox license in Malaysia to operate there, where we're going to be the first people to be doing KYC online. So, that we're talking about a regulatory environment in which the presumption has been that till now you're going to require a customer to come into your shop and actually, show you their ID in order to be able to send money. So we've got to level up so that people all around the world are going to be able to send money abroad.
I think the themes are key, right? I think you have to look at what are the themes for that regulation or that themes you're seeing in different areas. And I think one of the themes is definitely around marketplaces, right? You see this kind of huge, anybody in cross-border, most people in cross-border are running after these kind of marketplace models where you've got sellers selling a product in a global world, and then you have buyers, and then you have settlement, and then you have money going back and forth. And, representing both sides of a transaction, right, probably needs some more regulation, right? That is a huge risk area. And frankly, every, or most cross-border related payables companies are rushing to that area. And I think it needs a little more oversight. So I think you got to look at the themes that are common in those places like, digital KYC, like those marketplace models where we're getting called out in many places around the world from a regulatory perspective. I think that's the part you got to watch.
I'm not sure if he agreed.
He had to leave, so sorry about that. But well, we have some interesting questions now from our audience. The top question, this goes back to you.
Get someone to come into the seat.
Is how is Western Union responding to the challenge posed by the new generation of cross-border payment providers, many of whom are sitting here on this panel?
Yeah, I think a big shift that we've made, whereas maybe in the past we viewed some of these new challenges directly as a competitor and tried to compete head-on, I think a big shift we've made over the last 12 to 18 months is actually how can we enable them with capability. So with the breadth of platform that we've got, our ability to move money into bank accounts anywhere in the world, to disperse cash in locations across 200 countries and territories, how can we give the fintechs access to that through an API? And you'll see in the investment that we've made over the last kind of 18 months has been very API focused around all of those services, even the compliance and KYC, being able to enable them to onboard their clients using some of our algorithms and packaging that in a way that they can then present that in their product or service to their customers. So that's definitely the co-opetition model is something that we see, and you've seen announcements with Facebook and WeChat and some of the other fintechs that we've been working with, where we're the underlying engine powering the service that they're providing to their customers.
Yeah. I do think that the valuable asset that Western Union has is the feet on the ground all around the world, because there are so many people who don't have bank accounts to get their funds loaded into, who don't have cell phones, and this really is it is an asset. It's hard to manage, of course, but
and as we said, the barrier is really high. So
that's
for someone coming into the
partly because you've signed up a bunch of exclusive deals with these emerging companies and banks in emerging markets that effectively locked out any kind of competition for sending money into those markets.
I'm not sure if that's the case. I'll say more that the barrier to be able to send money cross-border for anyone who's coming into this market from a compliance, from a licensing perspective, is high. If you want to go out and start providing services in 20, 30 countries, it's not something you can start tomorrow. It takes years to basically accumulate the licenses and the footprint to do that. So
for sure, it's very challenging though when there are exclusivity agreements operating in some countries. I know that Western Union is moving away from those, but it certainly doesn't encourage competition.
I mean, it's been pointed out multiple times from the World Bank all the way down. That's one of the key restrictions in getting money into these countries and keeping prices high. And it's kind of like in a world where everyone should be working with everyone, that's the whole conference is about, building big payments networks. That's still a big inhibitor. It's protecting supernormal profits at your end, but and they'll slowly erode. But that's one of the big problems I think any players that come in have.
Well, the landscape is changing, and we all know that.
That's true.
We have a question here from Carlos. I guess the multinational companies are the ones who do the most cross-border payments. What would drive them to move from bank to fintechs?
Cost.
Yeah.
Saving a shit ton of money.
I'd say value too. Yeah, I mean, to me, it's the whole, you wrap it around a value prop, right? And we announced 2 months ago the fact that Flywire is now open for any business sending an invoice to another country. And I think the biggest thing that surprised us is we initially thought it was going to be small to medium-sized businesses coming on board, but you see divisions of multinational corporations who have trouble in certain markets.
Yeah.
And it maybe shouldn't surprise us, I guess, in hindsight, because we had to build this global banking network, and we work with, the Citibanks and the Deutsche Banks and large global banks. And each region is still its own bank, right? And requires that hurdle to get that local presence and local account. And even the multinational corporations struggle with that, right? So if they're going to, say, increase their business in Korea, the first question they have is, do I need a Korean entity? If I need a Korean bank account, I need a Korean entity. And so they have to go create this administrative function, finance function, around growing their global business. And what they want to do is they want to run their company, right? They don't want to become a payment company inside. And I think you can see this as well in the huge gig economy companies like the Ubers and the Airbnbs, right? They're staffing out entire payments companies inside, right? Airbnb, Uber have hundreds of people focused on payments because the infrastructure and because the solutions haven't been there for them to leverage. And I think that's just indicative that the multinational corporations need more than just bank accounts.
Yeah, I think for us, it's a great question too. I mean, there's a lot of focus being a payments conference on the payments, and we get excited about cost, speed, and all of these things. Businesses just care about efficiency. They want to take friction out of process, and for them, they don't get up in the morning and worry about payments. They get up in the morning and worry about, is basically the experience with my customer or my supplier going to be a good one, and is it going to be efficient as possible for the staff? So our focus is on taking friction out of that end-to-end process. So whether it's an invoicing process or a receivables process, giving the business services beyond the payment is kind of what we say, to take the friction out. And yes, making the payment as efficient and cheap as possible is also a big part of that.
And banks don't focus on this. So banks are driven by, lending. If you look at their revenue, it's all coming from lending. They always see this as a little thing they tag on that they have to do, and they charge through the nose for it. But probably the only people who have really good transaction services offerings are Citi and Bank of America, I'd say. Everyone else is really focused on that just as an ancillary revenue stream. So there's a huge opportunity for all the companies here.
Yeah, no, I agree. We have an interesting question here.
Yeah.
What does Alipay's pending acquisition of MoneyGram potentially mean for legacy cross-border remittance companies and new upstarts?
Who wants to take
Do you want me
that?
to jump in, or you want?
Yeah, I'm happy to have.
I mean, I think it's still, we'll see, I guess, is the answer. I think the thing that it does do is it kind of reconfirms that a digital business and a retail business, that there's value in those two coexisting. And that's what we are today, right? We're a retail business in 200 countries, and we're actually a digital business in over 40 countries where you can send money digitally from an app or from online. And obviously Alipay now buying a retail business, they're now piecing together a digital and a retail asset too. So I guess we'll see what that means. But interestingly, when PayPal bought Zoom, there was a lot of talk and hysteria about that having a massive impact on our business, and actually it had no impact. If anything, our business on the digital space has thrived, and it's been growing 30% year on year. So short answer is, we'll see.
Yeah, no, it is going to be interesting.
I think it's going to be a huge competitive push, I believe, right? I mean, anybody that's competed with other businesses in China, I think we've frankly lost a lot of that competitive flair in other parts of the world. And they have a very long view, right? And we're not talking like 5-10-year venture view. We're talking 100-year views, right, of winning. And I think that's going to change, right? I mean, you're going to see, I think, that little ant is going to be in a lot of places around the world.
Yeah.
And right now, I think people kind of look at it as something different and unique, and the average consumer doesn't know it, but I think it's just the start of a lot.
And Jack Ma's ambition is just vast. You know, he wants the business to be the fifth largest economy, Alibaba, just in the world by 2030. I think isn't it just great to have somebody who's got those massive ambitions and visions in the sector? I mean, I think it's going to be fantastic. I mean, it's going to be hard because, you know, pretty much every private equity firm in the world has looked at MoneyGram over the last few years and nobody's been able to make it work. And there's a reason there hasn't been a clearing price for MoneyGram, but it's going to be hard. But if anyone can do it, it's those guys. So I also wonder what it's going to mean for other assets in the space because, you know, they are seen as globally the really smart money. And if the really smart money is piling into cross-border, then, you know, are people just going to let that happen and leave it aside, or are other people that you might not expect going to think, you know, the Facebooks, the Googles in the West, and, you know, obviously Tencent and some of the other competitors in the East, what are they going to do to respond to this? Watch this space. I mean, this time next year we'll know.
Yeah, I think the other thing is, again,
hard to know.
the theme of that co-opetition. So yes, it's a threat, but also it's an opportunity for us. And we've been working closely with Alipay now for 18 months. They're almost like a collection agent for us for payments from China, you know, coming into the US or the UK. Again, the use case being a Chinese student paying tuition for NYU or for Harvard, and we turned on Alipay wallet functionality, and within 2 months, with no marketing, 51% of payments from China were coming from an Alipay wallet. So just again, it's a threat, but also it's an opportunity, and we're already working closely with them.
Wow. Well, we have another question about fraud, and I know that Alice already mentioned this. Do you think that sharing KYC and fraudster data between fintechs and banks is something that you're going to be seeing happening in the near future?
Well, I certainly hope so. I mean, in the UK, the HM Treasury has set up a fintech delivery panel that World Remit sit on alongside lots of other fintechs and also banks to come together as an industry and discuss issues like this. We'll have to see if that kind of thing actually does make the progress that we want. I guess the other alternative is specific fraud prevention companies doing this on their own. So I was sitting next to the CEO of a fraud prevention company last night, and he was saying, our big advantage is that because we work across so many different industries and we're trying to detect fraud for them, we can use that giant data set. So, either the industry shares within itself, or we're all going to have to start using other providers who've got that kind of cross-cutting view.
I know that lawyers get nervous when they talk about sharing data just because what if the data is wrong? What if it comes back? What if we're violating other person's privacy? Does this turn us into a credit reporting agency? I mean, there are all these little weird, anytime you do that sharing, it has to be done. It needs to be done for the industry, but it's got to be done carefully.
And it's not just the regulation. I mean, it is also the companies themselves. Obviously, everyone knows that their data is one of their most valuable assets. So it's thinking about how we can share that in ways that people don't feel undermines an asset that they've built up.
And we could probably do with some clarity for regulators as to which is the primary aim, preventing AML, or doing AML and good KYC and preventing money laundering, or is it consumer protection? And it's very unclear.
There is a little
which
friction
is
there.
primary.
Yep.
Yeah, these regulators often have different divisions and an inconsistent view of the world.
There's some parallels to data security, right? A lot of folks have started to do this kind of sharing cross-company data security. And I think you can look at a lot of those models and find applicability in how to share that.
There's an interesting question here about telcos. We've been talking about partnering with banks, sharing data, so do you see partnerships and deals with telcos becoming more important to this industry?
World Remit kind of blazed a trail on this one, actually, so you should take that.
Thank you. Certainly in terms of mobile money, in terms of the emerging markets partnerships that we've done, it has been incredibly fundamental. So what we're seeing is, in a lot of countries where banks aren't interested in serving the kind of very poorest consumers, or maybe just like the rural consumers because they haven't found it worth their while, the telcos have stepped in and provided those financial services in the form of mobile money wallets. So we've created these partnerships around the world. We can now reach 114 million customers for sending money directly to mobile money, and that's exclusively through these partnerships with these big brands that are very trusted in their companies. We're talking about, the MTNs, the Oranges of this world. So yeah, I think absolutely on the receive side, telcos have been massive, and we may be seeing more of it on the send side soon too.
Yeah, same for us too. I mean, we've got mobile wallet payout capability in I think 13 countries where we can send money to a wallet. You know, Kenya being obviously a big use case, but lots of other countries in Southeast Asia where, to your point, it's the most efficient way of getting money to the end recipient, you know, especially if they don't have an actual bank account.
And how do they convert the value that's in their mobile phone to local currency?
Well, firstly, you typically don't need to, so you can pay directly for goods from your phone. Some people have their salaries paid directly into their mobile wallet, but if you do want to get cash out, then they use on every corner there'll be somebody selling, who was selling airtime top-up, who can cash out the money for you for a small fee. And you see, there are literally thousands of these agents within even a kind of small space. I think the last thing I want to say on mobile money, because we spent a lot of time talking about Bitcoin, obviously it's really interesting in terms of how it might revolutionize the industry. If we're talking about transaction volume, in December 2016, every 90 seconds, there were more transactions done on the mobile money network than were done in a full day of Bitcoin transactions. So this technology is huge, but people at conferences like this tend not to be talking about it.
Well, we're down to our last minute. We have one more polling question and that I think will be advised by this very rich dialogue that we've had. Can you provide the last polling question, the second polling question for us to think about? Looking long term, this was who is going to win or own the cross-border remittance market? Okay, we're gonna. We have a lot of our own panelists here. We have a lot of new ones, either ones we don't even know about yet.
The answering group.
I obviously didn't bring enough colleagues to this conference.
Yeah. So we have
I'd go with 10.
Yeah, well, Tencent is, after hearing about the, discussing their potential acquisition. Okay. Well,
Luckily, we're not on VCs.
well, we're done with our dialogue on this changing area. I want to thank our panelists. I thought this was a really great group, and if you have any questions, I'm sure we'll be available afterwards. Thank you.
Thanks. Thank you.